There we go, great. Thanks everyone. I hope you enjoyed lunch, and specific thanks to Kate and Nick and the team at Reed Corporate. This truly is one of the best conferences of the year, and I'm glad you're all attending. Gives me great pleasure to present to you today the Sun Silver story. As Kate mentioned, we only listed a touch over 3 months ago, and it's been one hell of a ride since then. And I'd just like to outline to you what we've achieved in that short period of time and what the plan is moving forward to create more value for our shareholders. So our standard disclaimer, please read that at your leisure. So Sun Silver now is the largest pre-production primary silver deposit on the ASX. We announced last Wednesday a significant resource upgrade, which puts us as the largest development primary silver asset on the ASX, but we're not stopping there. There's continued growth potential. We're actively drilling a 7,500 metre drilling campaign, with extensional drilling recently intersecting more mineralisation outside of that recent resource upgrade. And this is fully underpinned by a massive shortage of silver in the world. We've been in a deficit for the last 4 years, 20% year on year, and I'll elaborate around that silver deficit and the growing industrial demand a little later in the presentation. I touched on it earlier. We increased our globally significant resource last Wednesday by 45%. That took us to 423 million ounces of silver equivalent at a grade of 67.25 grams per tonne. Pure silver, that's 253 million ounces of silver in the ground, along with 2 million ounces of gold. This is a silver gold asset, a primary silver asset with a gold credit. If you look at it here, this is a comparison amongst some of our peers in that early stage development sphere. We sit head and shoulders above a large proportion of those groups. You see Bowden's Silver Mines asset in New South Wales there with 189 million ounces of pure silver. Sun Silver, as I said, recently upgraded to 253 million ounces. We listed just over 3 months ago. What a hell of a ride. We issued 125 million shares at 20 cents. Last Friday, we closed at 66 cents a share, which capitalized us at around $82 million. But as I said, we're not stopping here. We well cashed up with $6.5 million in the bank as of the end of the last quarter, and we're actively drilling. An extremely tightly held structure from the IPO, with the top 20 holding over 54% of the stock, and the vast majority of that is escrowed for 24 months. So we're fully aligned with the development pathway we're moving forward with and creating shareholder value. The board, myself, I'm chairman of JBY. I was also previously managing director of another company, Battery Age Minerals, which is presenting here tomorrow. I led the development, commissioning, ramp up of the Pilgangoora lithium tantalum concentrator. I hope you all took a moment to come and listen to Ken earlier, who was an amazing leader that we learnt under at Pilbara Minerals. And I also went back and led the integration of the Altura asset when that was acquired into the broader Pilbara Minerals business. I'm really well supported on the board by some highly experienced developmental personnel. Dina Segovic, our non-executive chair, who's with me, and Nathan Marr, who's a metallurgist, and we place a heavy emphasis on the metallurgy for this project, which I'll talk about a little later. And Nathan has built 2 plants around the world. And our boots on ground is Robbie Anderson. He's a Nevada native, born and bred, has spent all his time working in the Carlin Trend, 17 years working for the likes of Coeur and Newmont. So a really development-focused team. So let's go on a bit of a journey. Nevada, the USA, one of the best mining jurisdictions in the world, voted number 1 by the Fraser Institute in 2022. It produces 75% of the United States silver and gold. And we're located in the Carlin Trend. Now, what's notable about the Carlin Trend is the geological setting. Soft, carbonate host rocks, which lend themselves to low-cost mining and production. And we're 85 kilometres from a town called Elko. It's a fully serviced mining town. It's a bit like Kalgoorlie. It's got 12 drilling contractors, everything we need to operate efficiently as a development company. And look who's around us. We're surrounded by some notable peers, the likes of Coeur, who are operating the Rochester mine. Kinross's Bald Mountain mine is 25 kilometres from us as the crow flies. Barrick's Carlin mine, and also Blackrock are in the region. But I really want to focus on a couple of these operators and explain to you why Nevada is such a fantastic jurisdiction. Rochester is a primary silver mine. It operates at a head grade of 12 grams per ton. If you look at Sun Silver's pure silver head grade, we're over 40 grams a ton. Their cost applicable to sales, their all-in sustaining cost currently sits around $24 an ounce. And they're expanding that project. They're putting about $500 million US into it to expand it to a 32 million ton per annum processing plant, crusher and heap leach facility. And they're looking to bring that sustaining cost down to around $14 an ounce. And how are they doing that? Well, they mine for a cost of about $1.90 because of the soft carbonate host rock. And their processing cost is just a touch over $10. So it's an extremely cheap jurisdiction to operate in. Just for the gold bugs out there, if you look at Kinross's Bald Mountain mine, for the last 2 years, they've operated at a head grade of 0.4 grams per ton. A lot of people wouldn't even look at that, okay? But 0.4 grams a ton with an all-in sustaining cost of $900 an ounce, and they're making money. And they have 2 years left on that mine life. So operating in the region is extremely sustainable with perceived lower grades, and all these major billion-dollar groups are doing it. But talking about our project, our globally significant Maverick Springs project, as I mentioned, 40 clicks from Elko, 85 kilometers from Elko, 40 kilometers to Ruby Valley. It's a fantastic project. We have a lot of well-established infrastructure, access to water, well-defined roads, in a flat topographical area which is well-established. And the resource itself, globally significant. As I said, 423 million ounces. It's a huge number at 67.25 grams per ton. Silver gold, 40.25 grams per ton with a gold credit. If you look at it from a gold equivalent perspective again for the gold bugs, we have about 5 million ounces of gold at a touch under a gram a ton in the ground here on an equivalent basis. And we've grown it. We announced on Wednesday that we've taken it from 292 million ounces, which you can see here in the pink, and we've grown that to over 400 million ounces. So we have an extremely large resource, which we're now moving forward. But as I touched on earlier, we're not stopping there. There's a hell of a lot of exploration potential here, which we're currently working on. The asset itself is open in all directions, and there's been over 200 holes drilled here for about 60,000 meters. Now, when we acquired the asset, we grabbed that data and we intensively interrogated it to define what we wanted to see from a drilling program. Where should we go and put the drill rig? Where could we add value for shareholders? And this is how we did it. We mapped all the high-grade intersections throughout the whole ore body. All of these are intersects up to 100 grams a ton and beyond. And we focused predominantly on an area in the northwest section, which had intersections of 50 meters at 300 grams a ton, 100 meters at 113 grams per ton, 53 meters at 142 grams per ton. So we defined a thick, high-grade zone in the northwest, and when we looked at that even further, we had intersections over 1.5 meters of up to 6,216 grams per ton. So extremely high-grade zone. We heat mapped this. We took all the data, we plotted it, and look what we saw. We saw this high-grade section in the northwest, and we said, that's where we're going to go and put the drill rig. So we defined a drilling plan. We got out there on the ground, we started doing field works, and we defined this zone, and we got out with the PXRF, and we found anomalous arsenic readings throughout the whole northwestern section, which is conducive to Carlin-style silver-gold mineralization. And that's where we put the drill rig. We defined these zones, we tendered the contract, we engaged Alford Drilling, a local contractor from Elco, and we put them on the ground in this section which we had looked at to be highly prospective. And in our first 2 holes, what did we do? Our first 2 holes outside of the 423 million ounce resource, we intersected high-grade, thick silver. So this asset is not finished. As you can see there, 41 meters at 126 grams per ton silver equivalent. And that's where we're drilling right now. As I speak, the drill rig is turning day and night. We've drilled 4 more holes, and we announced these yesterday. So extensional holes via PXRF. So again, thick intercepts, 53 meters, 33 meters, with anomalous arsenic, antimony as well, and silver, and we expect those assays to come back from the lab in the near term. So we're going to continue drilling. We're also going to carry out infill drilling to upgrade the resource. Previously, over 30% of the resource was in the indicated category, and we'll continue to drill and add value with the drill bit. But I just want to quickly talk about the macro silver market for those who aren't aware. We've been in a deficit for the last 3 years. It's been growing year on year by about 20%, and the Bank of America has forecast that this could be 125% by 2030. This is predominantly down to 2 reasons: growing industrial demand from the use of silver in solar, and also the fact that the vast majority of mines in the world cannot ramp up to meet the demand. They're actually declining. Production is declining from these mines. So if you look at silver and solar, this is where we see the biggest growth market. I'd say everyone here has a solar panel on their roof, but did you know that the material cost of it, 23% of that is actually silver? And if we maintain the growth profile, which is going from 48 million ounces in 2014 up to a projected 250 million ounces in 2024, we would essentially consume all the silver above and below ground. It would be wiped out. We would have no more. So silver mines are needed. And as I touched on earlier, that silver deficit of 184 million ounces in 2024 is the 3rd year in a row, and it's forecast to grow. The United States, where we are, they've set lofty targets for the deployment of solar throughout their electrical grid. They want 30% of their electrical grid to come from solar by 2030, 45% by 2050. They've only had 3% over the last year, so they have 125 gigawatts year on year to meet that demand. So silver is the most critical metal that poses a price and a supply risk to this build-out. There's a reason why banks like Bank of America, Toronto Dominion, and all these other banks are forecasting the price of silver could spike to up to $50 an ounce in the near term. But we're also looking at silver paste. So silver paste is how silver is actually used within a panel. Over 90% of solar PV cells are made in China. It's a common story with respect to a lot of critical minerals. Only this year, the Biden administration increased a tariff on the import of solar componentry from China to 50%. That was originally put in place by the Trump government. So incoming or outgoing, whichever group we see at post-election year, they're fully aligned with the build-out of solar within the United States. And most recently, we submitted a grant application to the Department of Energy to obtain a grant to the tune of $60 million via an investment tax credit to actually build a solar paste facility within the United States, which will be part of an integrated system with our Maverick Springs mine. So right on time. We've had a fantastic start, but we're not finished yet. We have a hell of a lot of work to do and a hell of a lot of value to add to this project. And we're delivering on our promises. We said we would upgrade the resource. We've delivered that. We said we would commence drilling. We've done that, and we've intersected high-grade, thick mineralization outside of the resource. We will look to upgrade the classification this year to indicated through infill drilling and twinning of select holes. And we're about to kick off a met test work program later in the year. We've engaged a metallurgical group to review the historical met work, and we're very excited to put our own stamp on that and start defining processing routes. And the silver paste investigation work, which I discussed, we'll continue working on that. So a large quantity of work ahead for Sun Silver, and we're really excited to keep moving this project forward as quickly as we can. So thank you for your time. Enjoy the rest of the presenters and enjoy the rest of the conference. Thank you very much.